Let me introduce Crystal Worldwide Group as an international law firm specialized on residency by investment, wealth planning, and corporate structuring. Crystal Worldwide participating at our events for the past 10 years, and they're very well known and respectful company for our clients and partners. Today, our program will be divided by 4 main parts, and we have today 4 speakers from Crystal Worldwide. I kindly ask you to ask your questions during presentation of speakers. We will pick up them right after of each speech and answer verbally. First, our speaker will be Sheval Seri. She will introduce Hungary with the most popular corporate structures and their advantages. Right after her, the next speaker will be Balint Banyai. He will describe a Hungarian way of wealth protection, private trust, and foundation. After him will be managing partners Csaba Magyar with very interesting topic, European tax wellness. And the last speaker will be Lila Benchik with her presentation about booming topic, a glamorous side of immigration. Details about each speaker they will provide by themselves. I would like to mention some rules about our event. Please be polite and respectful. Please do not share any contact details and any links which is not related to this event. In the end of each speech, we will have Q&A session. All presentations will be sent after the end of the event to your email, which you mentioned during the registration. And I would like to mention one more time that we have interpretation function into Russian and Turkish language, and Turkish language symbolized like French. Also, Crystal Worldwide Group will be joining our conference in Istanbul on 12th of May. You will have opportunity to meet them in person and ask your questions which you like. At this point, I would like to pass my words to Sheval Sari with her presentation, and thank you so much. Enjoy.
Hello, everyone. I would like to welcome all of you here in our conference, and I'm truly honored to be speaking you to about Hungary, Hungarian companies, setting up a business in Hungary, and their taxation. And before I dive into these topics, I actually want to share a little bit about myself. I'm an associate attorney here in Crystal Budapest, and I am not a Hungarian, but Turkish. And I was born and raised in Ankara, Turkey. I graduated from Ankara University. I did my master's here in Budapest. So that's the story why I am here today. And I know it's a little bit strange for some foreigner to introduce Hungary to you, but I think that should be the reason that I will be the one who introduces Hungary from a foreigner's perspective. I can assure you that my opinions about Hungary is quite fresh and unbiased. And I'm just simply someone who really liked this country, moved here, started working here. So I hope today I can express myself clearly that you will also see that why we should like Hungary. And if you're ready, I'd like to start with the Hungary's location. Hungary is situated right in the center of Europe, and it is kind of a bridge to north to south and east to west. It shares borders with Austria, Slovakia, Ukraine, Romania, Serbia, Croatia, and Slovenia. And the central position of Hungary made it an incredibly important player throughout the history and throughout the European trade as well. And over the centuries, it's actually kind of a crossroad for different civilizations, from the Ottoman Empire to Austrian, Hungarian period as well. And you can see this aftermath in every corner of this country. Probably the most remarkable example will be the capital, stunning capital, Budapest. But actually, Hungary is more than just Budapest. I'm someone who also lived in countryside as well. The lovely cities like Szeged, like Pécs, like Debrecen, and I can say that these cities are quite young and dynamic, given to its international students, international universities, but also, as you see, this beautiful vineyards, and countryside has a lot of fields, trekking areas, mountains, and you like to see the nature as well. I don't know if you are familiar or not, but the Hungarian wine is quite famous into this. And one of the most important things about Hungary, actually, starting from the countryside or from the capital, that it's actually quite an exceptional life here. For example, Budapest, it's a city that combines the architecture, the old and the new, and it's a mixture of both. And you can just take a stroll around Danube, or you can go explore thermal baths, enjoy numerous cafes and restaurants. I think Hungary offers a really lively nightlife, lively social life, and you can just enjoy living here as well. But I think there's one thing that makes Hungary stand out among its peers. It's that it's affordability. Whether you are just a tourist for a short period of time here, or you want to move here, stay long term, what you will see is that it's significantly affordable compared to Western European countries. Whether from dining out or renting places or the employment fees, it's actually considerably cheap. And the services and opportunities you will receive or see is more or less the same. On top of that, especially for people who are planning to move here with their family, I think one thing that they consider the most is the safety. What I can say is that, okay, living in a capital has its own advantages and disadvantages. But one thing that it mostly brings as a bad thing is that the safety issues. But one thing I can say is Budapest is one of the most safest capitals throughout the Europe. And if you are planning on moving with your partner, with your kids, and you are anxious about if they will get into a safe environment or not, I can assure you that it's quite a safe place to live in. And now I'd like to talk about the Hungary's economy. And because I know Hungary is relatively a small country, but has been growing steadily and has a lot to offer. The economy is well developed and with strong sectors like technology, pharmaceuticals, manufacturing as well. And the country has attracted, especially for the recent years, both international investments and talented individuals, and making it actually an attractive place for business and innovation. According to Immigration Insider, in terms of attracting wealth, countries fall into 4 categories. Unfortunately, Hungary is one that actively courting wealth. And why is it actively encouraging investors to come and invest in Hungary and develop the economy? It actually is that the corporate structure and the taxation. So today, why we are talking about Hungary or mainly investing in Hungary, because in recent years, as I told you, there's been steady growth and economic growth and business-friendly environment. And Hungary, apart from, yes, it's a part of European Union, and so it's consequently part of the European market, but it actually has strong connections with markets in the East as well. I think I took enough of your time about talking about Hungary. I can talk more, but I just don't want to bore you with these. And so I will probably come into the most exciting part of my part of this presentation, is that the corporate structure and corporate taxation and how to establish a business in Hungary. And let me break it down for you. I actually wonder how many of the audience is already familiar with Hungary as an investment place, because I know Hungary is on the map, and many of you know Budapest. It's a nice place to go see the parliament, see the Buda Castle, the Fisherman's Bastion, and come back. But actually, Hungary is more than that. And for your next investment plan, I am here to tell you that Hungary can be on the menu as well. Why? Because it's lowest corporate income tax with just 9%. You're a business person who are looking for opportunities to extend your business in Europe. Hungary can be a good option. This low 9% tax rate allows companies to retain most of their profits, so the money they earned, and they can later reinvest this into the corporate growth, or for the talented individuals, or for innovation, or just expanding in other jurisdictions, other markets as well. So Hungary's competitive tax policy actually does more than just taxing the profit with a low amount, but it's actually beneficial for later steps of the company, of the business as well. In addition to this, Hungarian tax policy offers a number of incentives considering innovation and research. The country's tax system encourages businesses to invest in research and development, which has become essential for long-term businesses. I think it's a win-win situation. Both you will receive your profit and you will keep most of it because of the low tax, and also then you can reinvest this and earn more money. So it's like both situations very beneficial. With Hungary's developed banking and financial systems, business-friendly tax structure, I think they are really complementing each other. So you don't have to worry about the banking and financial development as well. It's quite well developed and used in Hungary. And right now, the most optimal option to get benefit from this corporate taxation, this tax incentives, and business-friendly environment can be establishing a company, a business entity here in Hungary. And I'm today going to talk about the most common business entities to you and how they incorporate it and what is their features. So you can also decide whether or not you would opt for setting up a business in Hungary. So the most common business entities in Hungary is a limited liability company, which is the Hungarian abbreviation is KFT, and the private limited company, again, the abbreviation is ZRT. Let's start with KFT. The Hungarian KFT is quite similar to German GmbH or the LTDs, LLCs, the limited liability companies that you see in every other jurisdiction. Yes, as the name indicates, it gives limited liability to all of its members. And maybe you noticed that there is no such a thing as a shareholder in KFT. They are members and it determines the ownership of the company. And the members and the directors of a KFT is the informations of them are publicly accessible in the Court of Registry records. The minimum initial capital to establish a KFT is 3 million Hungarian forint, which is approximately 7,500 euros or something. But the good thing is that you don't have to pay this amount in the beginning, in the time of the incorporation. You can pay it later until the share of the dividends. So this initial capital requirement are not required you to pay in the beginning. You can pay it later. And the statutory audit is a requirement for a KFT if the net sale revenue of the company exceeds 300 million forints and the employees who are working there is more than 50 people for the last 2 years, there is this statutory audit requirement for a KFT. If the numbers are not exceeding these, there is no such a thing as a statutory audit. And for every Hungarian business entity, I will say the same thing in KFT as well, ZRT as well, I'm sorry. The bank account opening in a Hungarian financial institution is required. So you have to open up a bank account in Hungary, and the director of a Hungarian KFT can be a natural person or can be a legal entity as well. But in case of a legal entity director, there must be a natural person appointed. And as I told you, there is no issued shares in Hungarian KFT, there's only members. And in case of a ZRT, the private limited company, it also gives limited liability to all of its shareholders. And ZRT is a most suitable business entity when there is many business partners, many shareholders. So it's like a big and vast entity compared to KFT. And for a ZRT shareholders, if they hold more than 50% of the ownership of the shares in a ZRT, their records are accessible, their information are accessible in Court of Registry records. But if they hold less than 50%, they are not available on the Court of Registry records. The initial capital requirement for a ZRT is minimum 5 million Hungarian forint, but unlike a KFT, the 25% of this amount must be paid in the beginning, and the remaining amount can be paid in a year. And the bank account opening is the same requirement as a KFT, and the statutory audit requirement is the same. The incorporation, actually the Hungarian company's registration is a relatively fast process. It can be done in a couple of days. If it's a standard procedure like an M&A, it can be even happen in a day or two. And this incorporation process actually can be done remotely until the bank account opening. We do not require a client to come Hungary and to be present. Everything can be done remotely until the bank account opening. And after the registration, the investor, the client can receive the documents like memorandum and articles of association, certificate of incorporation in English translated versions, the list of directors, the address of the company's registered address, and a notarized specimen of signature of the director as well. let's come to the annual requirements for a Hungarian business entity, for a Hungarian company. Every Hungarian company is required to prepare a financial statement on a nearly yearly basis, according with the Hungarian accounting standards. Companies are required to file a financial statement every year until the 31st of May. Otherwise, the company may be struck off from the register within a few weeks. And in Crystal, we provide accounting services next to the incorporation procedures as well. So you can find everything in one place. So we have this approach. Director of a company can perform his or her duties free of charge. If the director and the shareholder is the same individual, the shareholder will be required to submit a monthly tax report and pay a social insurance contribution, which is approximately 300 euros in a month. But there won't be any payable social insurance contribution in Hungary if the foreigner shareholder can prove that he or she is covered by the social insurance of their residence country, or their residence country has a treaty about the social contribution, social security with Hungary. I know the information that I provided to you can make no sense or maybe can seem a little bit too complicated, but I can assure you it's actually quite a smooth process and there is no need to be scared. Why you should choose a Hungarian company, and in a nutshell, I'd like to tell you that Hungary has the lowest corporate income tax in the EU. Personal income tax is taxed at a flat rate of 15%, and Hungary operates a tax system which fully exempts dividends and capital gains, has no withholding tax, better CFC rules, but these topics will be covered by my colleague Csaba, so please don't miss out. And there's a central location. It's in the Central Europe, heart of the Europe. And I told you about the fast incorporation process. And there is residence permits available coming within this setting up a business, like guest self-sufficient residence permit and national card, which will be covered by my colleague Lilla. And there is other wealth protection tools, such as trust and foundation, available in Hungarian law, which will be covered by my colleague Balint, right after me. So thank you so much for your attention. I hope it was interesting for you. I hope I could have been a little bit of help, and I would like to receive your questions. You can see my contact information. If you need any assistance, I would be more than happy to assist you.
I just would like to ask a few questions which we received from our participants during the registration. Can foreigners be a company director?
Yes, a foreigner can be a company director, but if this person is a foreigner, there will be a delivery agent must be appointed. So they will receive the papers in Hungarian, and the delivery agent must be Hungarian too.
Is there any nominee director scheme in Hungary?
In Hungary, there is no such a thing as nominee director. There is only a director in this business structure, so no.
What are the most common challenges investors face when they're setting up a company?
Actually, if you ask me, considering the initial capital requirements and everything, it's not challenging, but maybe for some, the challenging part is managing the accounting and the financial requirements, the annual requirements. But I told you that we are actually a place that realizing everything at one place. So they don't need to think about the accounting as a separate part. They don't need to think about the incorporation as a separate part. So it can be happen all in one place. So maybe that's the one thing that I can see as an issue or a challenge or a hard obstacle. But other than that, I don't think there's any.
What is the minimum investment for me to qualify residence? The question from Abdi.
For the investment, actually, my colleague Lilla will cover this at the end of this conference. So maybe it's better to let her explain, and maybe after this, they won't have this question anymore because I'm sure it will be answered by the end of this.
Thanks. We just received one more question, sorry, from Terence. So the foreigners is 100 owned of the company formed in Hungary. How I understand the question is, would be foreigner 100% owner? Yeah?
Yes, it can be. Thank you so much. So I'm leaving the floor for my colleague Balint, and they will present you the wealth protection tools in Hungary. So thank you so much for everything.
So, I would like to welcome you all. I am Bálint Bányi, a junior associate at Crystal Worldwide Law Firm. In my presentation, I will talk about the Hungarian Trust and the Asset Management Foundation as tools for conscious wealth building. Beyond the legal framework, I will also highlight the advantages of these instruments and who can benefit from using them. Certainly, we all know Uncle Scrooge, the billionaire duck, and we all know how much he loved and protected his wealth. Although Uncle Scrooge kept his fortune in a safe, this solution was only good for swimming in the money and not much else. He could have kept his fortune much safer by not locking it away in a safe, but rather placed it in a wealth planning instrument, which could also protect from the thieves and creditors, and also allow Uncle Scrooge to increase his fortune over the time. First, I want to start with the Hungarian Trust, which is a relatively new concept in Hungary, as it was introduced just over 10 years ago with the new civil code. However, it gained popularity due to its favorable estate planning, wealth protection, and also tax regulations. Let's see who are the parties of this contract. The trust agreement is a contract between the settlor and the trustee, and by entering into this agreement, the settlor transfers the ownership of the selected assets to the trustee, who will manage them for the benefits of the beneficiaries within the framework defined by the settlor. So as you can see, there are three parties of this contract. First, the settlor, who must own the selected assets he wishes to transfer to the trustee, who can be a legal person and a natural person as well, and the beneficiary, who could be anyone, because there are no restrictions or requirements on the person of the beneficiary. And as you can see on this picture, the settlor transfers the ownership of the selected assets to the trustee, who will become the legal owner of them. And the settlor can also appoint a protector to supervise and oversee the trustee's asset management activities and to report to the settlor and also to the beneficiaries. The trust consists of the transferred assets, and the beneficiaries can receive payments and other financial benefits from the trust. The settlor can also be the trustee, and the trustee can also be one of the beneficiaries, provided that there is at least two beneficiaries of the contract. And this means that Uncle Scrooge, as a settlor, could appoint himself as a trustee of his transferred assets, and also Uncle Scrooge could be one of the beneficiaries, provided that there is at least one more beneficiaries of the trust. And moving on to the rights and obligations of the parties, I would like to start with the settlor, because the settlor holds the most rights in this relationship. The reason behind it is that the settlor transfers the ownership of the selected assets to the trustee without consideration, therefore it making the relationship between the settlor and the trustee highly trust-based. The settlor has the right to select and remove the trustee, to select the beneficiaries, and set the conditions for the asset distribution between them. The settlor can also define the framework of the asset management, and additionally, he can monitor the trustee's activity. However, please note that the settlor cannot instruct the trustee regarding its asset management activity. Therefore, it is advisable to set up clear conditions and boundaries for the trustee in the trust agreement. Moving on to the rights and obligations of the trustee has the right and also the obligation to manage the assets to its best abilities, since the trustee bears significant responsibilities. The trustee also must disclose the agreement to the Hungarian National Bank and to distribute the managed assets between the beneficiaries according to the trust agreement. The trustee also must administrate, protect from creditors, and separate the managed assets from his own personal assets. And there are two types of trustees. The first one is the professional one, and the trustee can also be an ad hoc one. And this distinction is crucial because different rules applies depending on the classification. According to the Hungarian Trustee Act, trustee who manages assets under only one trust agreement is seen as an ad hoc trustee. And an ad hoc trustee can be an individual and a legal entity as well. And if the trustee is an individual, this individual must have a clean criminal record. And as I mentioned, the ad hoc trustee can manage assets under only one trust agreement. And in this way, the trustee can operate without the trustee license issued by the Hungarian National Bank. And as I mentioned, the trustee must disclose the trust agreement to the Hungarian National Bank, and the Hungarian National Bank maintains a registry of these ad hoc trust agreements. However, this registry is not publicly accessible because only a few authorities can look into it. And every changes and modifications regarding the person or the details of the settlor, trustee, and the beneficiaries must be reported to this registry. However, modifications or amendments regarding the managed assets, for example, the increase of the volume of the managed assets or the change of the rules of the distribution between beneficiaries shall not be reported to this registry. And the beneficiary has only rights in this relationship, since the beneficiary can receive payments and other financial benefits from the trust, and the beneficiary has also the right to monitor the trustee's activity. However, the same rules apply for the beneficiary as for the settlor, because not even the beneficiary can instruct the trustee regarding its asset management activity. And as you can see, almost any type of assets can be placed in a trust. However, the most common are real estate, for example, apartments, movable properties like cars, jewelry, or even watches, and even cash, security, business shares, or even cryptocurrency can be placed in a trust as well. And as I mentioned, I will also highlight the advantages of the trust, and I want to start with the most interesting advantage of the trust, which is the taxation, because the favorable Hungarian tax regime helps the spread of the trust in Hungary. However, I will not get into the details of the taxation of the trust, because my colleague Csaba Magyar will cover this topic in detail in his presentation. So don't miss out. The next advantage is the generational wealth transfer, because in family-owned businesses, the business succession is a key issue. However, the trust can make the business succession as smooth as possible by helping the transition of leadership in these family-owned businesses. One of the most well-known advantages of the trust is the asset protection, because after the assets are transferred to the trustee, they are legally separated from the settlors and even from the trustee's personal assets. And this has the following protective effects. The creditors of the settlor cannot claim the transferred assets. The creditors of the trustee cannot seize the managed assets. And also the creditors of the beneficiary cannot access these managed assets until they are distributed to the beneficiary. Further advantage can be the inheritance planning, because in case of the estate planning, the trust offers way more flexibility than a will, because the settlor can freely decide on the person of the beneficiaries and their respective shares as well. This means that Uncle Scrooge, as a settlor and a trustee, and also as a beneficiary, can decide freely on the person of the other beneficiary and their respective share as well. So he can choose his favorite nephew Duck to be the other beneficiary besides him. And further advantage is the continuity, because the trust managed assets do not require probate proceedings upon the settler's death, so the trustee can ensure the stability for the actively managed assets like business shares. And who do I recommend the Hungarian trust for? In my opinion, the trust is recommended for investors and business owners seeking protection from external risks, also for family business owners looking to facilitate generational transitions, and for entrepreneurs planning to sell business shares or realize investment profits as well. However, please note that this list is not exhaustive at all, because the trust can be beneficial both in private and business life as well. And moving on to the Asset Management Foundation, if you like the following phrase, own nothing, control everything, then you may also like the Asset Management Foundation as well. The purpose of the Asset Management Foundation is to increase the managed assets, and for this purpose to engage in business activities. As you can see, the Asset Management Foundation is a legal entity which has no owner and can be founded with the minimum capital of 600 million Hungarian forints, which is approximately 1.5 million euros. This minimum capital can consist of various types of elements, like the real estate, business share, cash, or even cryptocurrency as well. And since the foundation has no owner, the transferred and managed assets are separated from the founders and the beneficiaries' personal assets, and creditors of the founder and beneficiaries cannot claim these assets. And let me introduce you to the key participants of the foundation. First, I want to start with the founder, who can be a legal person or an individual as well. The founder establishes the foundation and defines its purpose and operation framework within the founding charter of the foundation. The executive body of the foundation is the council, which is responsible for the operation and asset management of the foundation. In case of a private asset management foundation, the council can consist of one single individual. The rules regarding the beneficiary of the foundation are completely the same as for the rules regarding the beneficiary of the trust, because there are no requirements or restrictions on the person of the beneficiary, and the beneficiary of the foundation can also receive payments and other financial benefits from the foundation. If the founder assigns the founding rights to the council, then a protector must be appointed to oversee and supervise the asset management activities of the council. And only an auditor, auditing firm, lawyer, and a law firm can be appointed as a protector. And the last participant of the foundation is the auditor, because the Asset Management Foundation shall appoint an auditor permanently for audit the financial statements of the foundation. And the Asset Management Foundation can also fulfill the role of a trustee, but in this case, different rules apply for the trustee. The first difference is that the Asset Management Foundation as a trustee can manage assets under several trustee agreements without having the obligation to obtain the trustee license issued by the Hungarian National Bank. Further difference or advantage is that the Asset Management Foundation as the trustee shall not submit the trust agreement to the Hungarian National Bank. And the biggest difference is that the Asset Management Foundation as a trustee not just can be, but must be the sole beneficiary of the trust. And the foundation can be terminated in only two ways. The first one is that the founder exercises the founding rights and decide to terminate the foundation. The other option is if the foundation fails to maintain the minimum capital of 600 million Hungarian forints, or approximately 1.5 million euros, for 3 consecutive years, then it will be seen as the purpose of the Asset Management Foundation became impossible, and therefore it will be terminated. And who do I recommend the Hungarian Asset Management Foundation for? In my opinion, the Asset Management Foundation can be the best option for you if you want to ensure your legacy for generations, because unlike in case of a trust, which can be set up for a maximum time period of 50 years, there are no such restrictions regarding the Asset Management Foundation. The foundation may also be the best option for you if you want to protect your assets from external risks, also the claims of creditors or even relatives as well, or if you want to just simply optimize risk and also tax. And learn from the mistake of Uncle Scrooge and don't use a safe to protect your wealth, but rather use a more sophisticated wealth planning instrument like the Hungarian Trust and the Asset Management Foundation instead. I want to thank you for your attention and I am looking forward to your questions. Thank you.
We have a few questions. First one, can the trustee open a bank account for the trust?
Yes, there are two options for this. The trustee can open up a separate bank account for the trust or the managed assets, or the trustee can open a sub-account in his account for the managed assets as well.
And the second question which we received, can someone, for example, a family member or a settler, join the trust?
Yes, of course. Everyone can join an already existing trust because the trust agreement can be amended. So anyone can join as a settler, as a trustee, or anyone can be appointed as a beneficiary as well.
So the next our speaker will be Csaba Magyar with his attractive presentation about tax. And again, I would like to mention that Crystal Worldwide will join our conference in Istanbul. And if you would like to register to the conference and join us there and meet a Crystal Worldwide there, just let us know. You could write us an email or you could send us a message WhatsApp, or you could write right now a message in the chat. We will send you all details about this event. Actually, this event will be together with the Almaty conference on the same week, on 12th of May, Istanbul, and on 15th of May will be Almaty.
Hello, everyone, and thank you for the introduction. I really like your Hungarian accent, Sviat.
Thank you so much.
Actually, let me introduce myself also. My name is Csaba Magyar, and I know it is a very hard name, so I don't know which is harder to read it or to pronounce it. I think both are difficult. But Crystal Worldwide is the company where I'm the managing partner, and our firm was set up 33 years ago. I wasn't the person who started the business because of my age. That time I was at elementary school, but I joined the team more than 40 years ago. And we are a Budapest-based law firm where you can find different services, because we are specialized into foreign investors who would like to invest into Hungary. But if you are planning to invest to Hungary, I think it is very important to check the taxation of the country as well. I know the taxation is a very boring topic, but sometimes the tax could be the fight for your life as well. That's the reason why I would like to start with the story of Saint Mamas. Saint Mamas was a monk who refused to pay taxes to the state, but unfortunately it wasn't a happy end, because at the end of the story he was executed. But since then he has been the patron of tax planning, and I would like to call Saint Mamas to be the patron of my today's presentation. So let's see on the next slide the tax map of the European Union. This tax map was issued by the Tax Foundation, and you can see on this map that the European countries can fall into three categories. Countries with around 30% corporate income tax, countries with around 20%, and countries with around 10% corporate income tax. So if you check the countries in the third category, you can see that this is a very small club. Cyprus, Hungary, Ireland, Bulgaria belong to this club, and I can easily stipulate that Hungary has the lowest corporate tax rate in the European Union, which is just 9%. So That's the reason why I like to call Hungary as the European tax runners, because it is still an onshore jurisdiction, but you can face the lowest corporate tax rate in the European Union. But let's check the Hungarian tax system in a nutshell. So as I mentioned before, Hungary has the lowest corporate tax rate in the European Union. The Tax Foundation, I mean this organization, issued a so-called International Tax Competitiveness Index, and Hungary ranks 7th overall in this International Tax Competitiveness Index, where they check the OECD countries. So as you can see that Hungary is number 4 in the category of corporate tax. And I told you many times that we have just this 9% corporate tax, what you can face in Dubai as well, but this is a flat rate. So we do not have progressive taxation in Hungary, so you can enjoy this pure 9% corporate tax. But you need to pay attention to one more tax in Hungary, what we call municipality tax, or you can call it as local business tax, which is additional 2%. From this perspective, it really matters where your company's registered office will take place. For example, in Budapest, next to this 9% corporate income tax, there is additional 2% local business tax. But there are many cities close to Budapest and even in the whole territory of Hungary where there is no local business tax, because this local business tax is the discretion of the local municipality whether it will impose it or not. So when you calculate with the corporate tax, please pay attention to the local business tax as well, but you can legally cancel this tax if you set up your business in the right place in Hungary. So let's check the individual taxes in Hungary. It is also one of the lowest in the European Union, which is just 15%. I think in international comparison, it is quite advantageous. So unfortunately, it is not 9%, like in the case of corporate tax, but this 15% could be also very attractive for foreign investors who are thinking about moving to Hungary. And again, this is a flat rate, so there is no progressive taxation in the field of personal income tax. You just need to pay this 15% personal income tax. Hungary concluded a wide range of double tax treaties, and Hungary prefers to apply the so-called exemption method. It means that in most of the double tax treaties which were concluded by Hungary, Hungary applies exemption method. So in 99% of the cases, the foreign source income is tax exempt in Hungary if it was taxable in the foreign country, I mean in the source country. So that's the reason why it is always very important to check the double tax treaties of Hungary if you have a Hungarian entity, because you might have access to further tax advantages next to this 9% corporate income tax in Hungary. Let's check the main features of the corporate tax in Hungary. Hungary is also a very attractive location for holding entities. We have participation exemption rules. It means that the dividends received by a Hungarian company can be tax exempt. So in practice, it means that unless the dividends do not origin from a CFC, a controlled foreign company, the dividends will be under zero taxation in Hungary. And luckily, the CFC is also a very easygoing category in Hungary, because the foreign subsidiary shall be treated as a controlled foreign company if it paid less than 4.5%. in that country, and the Hungarian company owns more than 50% of the shares of this controlled foreign company. But if your case is different, then you can enjoy this 0% tax on dividends received by your Hungarian company. As I mentioned before, Hungary is a very nice option for holding entities because the sales of the shares is also tax exempt. I mean the profit on the sale of the shares. There is only one important rule to take into account. You need to keep your investment for at least 1 year, but after 1 year holding period, you can enjoy this zero tax on profit on the sale of the shares. I mean, when the Hungarian parent company sells the shares of the foreign subsidiary. And there is no minimum threshold in the field of ownership ratio. So if the Hungarian company owns only 1% in the foreign subsidiary, then the same rules apply because the tax will be zero on the sale of the shares of the subsidiary. I have good news for foreign investors because Hungary doesn't impose withholding tax if the recipient of the amounts are foreign corporate entities. Let's see what does it mean in practice. So if a Hungarian company is owned by a foreign corporate entity and this Hungarian subsidiary pays dividends to the foreign parent company, there is no withholding tax at all. This is an internal Hungarian rule, and even if the recipient of the dividends is an offshore entity, there won't be withholding tax at all. If the Hungarian company has an individual shareholder, there will be 15% withholding tax in Hungary, but of course this amount can be decreased by the applicable double tax treaty concluded with Hungary. You might know that the food is spicy in Hungary, and the Hungarian tax system has also very spicy features. When you set up a Hungarian company, you can choose between two taxation methods. You can be a general corporate taxpayer as an entity, or you can select to be a Kiva taxpayer. This is a so-called small business relief. And it is very advantageous because there is no tax until profit distribution if you go for this taxation method. So again, you can choose that you would like to pay 9% corporate tax on your profit, or you can be a Kiva taxpayer when there is no tax on profit until profit distribution. And when you distribute the profit, there will be only 10% tax what you need to pay after your profit. Maybe you know the Estonian tax system, which is very similar. For example, in Estonia, you can enjoy the same method of taxation. There is no tax until profit distribution. But in Estonia, there is 20% tax upon profit distribution, but in the case of Hungary, it is just 10%. You can see on the slide that there is a threshold if you would like to go for this small business relief. So you can choose this taxation method up to the yearly revenue of 7.5 million euros, and you cannot have more than 50 employees. But this taxation method is available for foreign investors as well, if they would like to set up a Hungarian company. But again, they can also choose the 9% corporate tax option, which is also very advantageous in international comparison. My colleague Balint talked about the trust and foundations in Hungary. I would like to highlight the most important taxation features of this wealth protection tool in Hungary. Hungary has a very unique approach to the trust because the Hungarian central bank is responsible to register your trust. But after the registration of trust, you are required to get a tax number for your trust from the Hungarian tax authority. So it means that your Hungarian trust will become a corporate taxpayer entity. From a legal point of view, the trust is not a legal entity, but from the point of view of Hungarian corporate tax, it shall be classified as a corporate taxpayer. But luckily, there are tax exemptions which are applicable to the Hungarian trust. If the settlor and the beneficiaries are individuals, and the income of the trust is related to financial instruments. For example, the trust will receive dividends, interest, income from receivables, and different investment income. In this case, there won't be any tax burden over the trust, so the trust can enjoy tax-free income. But other types of income will be under 9% corporate tax in Hungary. But in other cases, what you can see on this slide, there won't be any applicable tax in Hungary. And luckily, the same rules are applicable to the asset management foundations. This asset management foundation is subject of corporate tax in Hungary, but you can enjoy the same exemptions what I told you in the case of Hungarian trust. And now we can go on to some tax planning schemes, because nowadays the tax avoidance advice could be more important than the meaning of life. However, I wouldn't like to give you tax avoidance advices, but in the following slides, you will be able to see some tax planning opportunities. Of course, the devil is always in the details, but based on the following slides, you will be able to find out different structures if you want to do business in Hungary. In the middle of my presentation, I talk about the Hungarian holding regime. So you can see on this slide a holding entity. When a foreign company is the shareholder of a Hungarian company and the Hungarian company is the owner of a foreign subsidiary. So the Hungarian company can get dividends from this foreign subsidiary, and these dividends will be tax exempt in Hungary. And the same rule applies if the Hungarian company would like to sell the shares of the foreign subsidiary, because the profit will be exempt from corporate tax in Hungary. Afterwards, this Hungarian company can pay the dividends to the foreign shareholder without any withholding tax in Hungary. So Hungary could be a very attractive place for holding companies. But Hungary is not only about holding entities. So Hungary is highly recommended for software developers as well, because if you have some intellectual properties in your foreign company, this foreign company can license this IP to a Hungarian company, which can be the licensor and the licensee of this IP. And the Hungarian company can sublicense this IP to a foreign company. Consequently, the royalty which is paid by the foreign company, which is the licensee, will be under 9% corporate tax in Hungary, and this Hungarian company can pay forward the royalty to a foreign company, and there won't be withholding tax in Hungary. So Hungary is a very popular jurisdiction among software developers, because I think this 9% corporate tax on the profit and the lack of withholding tax on royalty can make Hungary a very attractive low-tax jurisdiction for tax planners. So Hungary is the perfect location for trading business as well. So the Hungarian company could be the middle buyer of a triangle transaction. This Hungarian company can buy goods from European countries, and afterwards this Hungarian company can sell these products to third countries. And the goods can be transported directly from the EU seller to the non-EU seller, and the profit will be under 9% corporate tax. But of course, the opposite direction can also fly when the Hungarian company will buy goods from third country companies, and this Hungarian company will import the products into one of the European countries. And again, you can enjoy this pure 9% corporate tax rate in this trading scheme, what you can see on my slide. So actually, Hungary could be the safe haven of your online business as well. So Hungary is highly recommended for online sellers, marketplaces, or online service providers, because they can enjoy this 9% corporate tax rate in Hungary. And when you provide online services to European countries, according to the Common European Directive, you need to charge the VAT according to the country of your customer. For example, if you have a Polish customer, you need to charge the Polish VAT. Luckily, there is a OSS system in the European Union. This is the abbreviation of a one-stop system. You do not need to register in Poland, in Sweden, or in Spain to charge their VATs. You just need to make an OSS registration, which is a quite straightforward procedure in Hungary, and then you can charge the VAT of different countries according to your customers. But you need to submit this OSS report only in Hungary, and you can pay the VAT of the different countries in Hungary. You can do the same in other European countries, but Hungary has the lowest corporate tax rate. So from VAT perspective, if you do this e-commerce business, it will be VAT neutral, but from the point of view of corporate tax, it makes sense to set up your online business in Hungary to enjoy this 9% corporate tax rate. So, actually, we are at the end of my presentation. I have one advice for potential investors who are considering to do their business in Hungary. So, I would like to advise you to do your business in Hungary, and maybe you will meet someone and you can enjoy some positive side effects as well. So if you meet someone in Hungary and you marry her, then nothing will scare you in the future. So this is how I would like to refer to the next presentation as well, because my colleague, she's a Hungarian lady, and she will talk about the immigration services, what we provide in connection with Hungary. So this is how you can meet someone in Hungary from practical point of view. So during the next presentation, you will be able to understand how you can immigrate to Hungary and how you can collect this special key for your future business transactions. So thank you for your time and thank you for your attention, but I'm ready to answer for questions if you have any.
Yes, we have. Thank you so much for your attractive presentation. Could you please answer, does Hungary have wealth tax?
Yes, this is a very frequent question. Luckily, Hungary doesn't have wealth taxes. So in the past, there were a few governments who were thinking about introduce a kind of wealth tax in Hungary, but luckily nobody introduced this wealth tax in Hungary. So it means that if you have a real estate in Hungary, there is no wealth tax on this asset.
The next one,
You're
how
welcome.
much is the VAT rate in Hungary?
The value-added tax rate is the highest in the European Union. So, as I mentioned so many times, that Hungary has the lowest corporate tax rate in the European Union, but Hungary has the highest value-added tax in the European Union, which is 27%. According to the tax policy of the Hungarian government, is not to tax the profit, it is better to tax the consumption. But for foreign investors, this high VAT rate matters only if they would like to serve Hungarian clients. In this case, they need to charge 27% VAT.
How's real estate taxation structured in Hungary? Are there any tax benefits for foreign investors?
There is no special tax regime for foreign investors if they would like to buy a Hungarian residential property. Let's say this could be an example, but in Hungary we have a so-called real estate transfer tax, which is 4% of the value of the real estate, but the same is applicable to Hungarian taxpayers as well. It means in practice that if you would like to buy a Hungarian residential property, then you need to pay 4% transfer tax.
Is there any taxation for crypto assets?
Yes, as I mentioned before, if you are a Hungarian tax resident, individual crypto investor, you can enjoy this 15% personal income tax. So it means that there will be 15% personal income tax on your crypto profit. But we have a very special method because during a 2-year period, you can deduct the previous year costs against the next year's income. So it means that you can make a balance during a 2-year period, which is also very good for crypto investors.
How much is the personal income tax in Hungary for residents and non-residents?
The same is applicable for residents and non-residents. So it means that this is 15% personal income tax. This is the general applicable tax rate. But for retired people, the pension is an exempt income. So maybe this is one of the reasons why a lot of people from Western Europe would like to be retired in Hungary because the pension is tax exempt. But if we leave this topic, so if we are talking about general income like salary, dividends, capital gain, and so on, this will be under 15% personal income tax.
Can Americans open companies in Hungary? I understand it's maybe about restrictions or...
Yes, there is no restriction.
There is no restriction.
Hungary.
Is there
No.
any other residents, like Russians, for example, could they open?
They can set up their Hungarian company, but the biggest challenge for them is the bank account opening. And if you paid attention to the presentation of Cheval, you could hear that it is mandatory to open at least one bank account in Hungary for your Hungarian business. Otherwise, your company will be cancelled. And if a Russian investor would like to set up a company in Hungary and the company cannot open bank account, in this case, the company will be cancelled. And Hungarian banks are following the standard European regulation. In 99% of the cases, they will not open bank account for Russian citizens unless they have a European residence permit.
Is there any more restricted jurisdictions, passport holders, like maybe Belarus or...
From corporate point of view, there aren't any restrictions in Hungary. From financial point of view, there are restrictions, but these are the restrictions of the banks. So in most of the cases, the banks cannot serve clients from sanctioned countries like Iran, North Korea, and similar places. And of course, it is always good to check the list of the Financial Action Task Force. If a country is blacklisted, it will be blacklisted in Hungary as well, and the client will fall under the high-risk category. And consequently, the banks will not open a bank account for these clients, or it will be very difficult to open it. But the same rules are applicable in all European countries, so you can face the same treatment in Hungary like in other European countries.
Is there any recent law changes in Hungary that should foreigner investor be aware? Maybe any forecast for changes in tax?
No. Hungary would like to maintain this 9% corporate tax and 15% personal income tax. This is how Hungary would like to attract foreign investors. BMW, Mercedes, Audi have factories in Hungary, but we have a BYD factory as well in Hungary. So Hungary is very interested in encouraging foreign investors to do their business in Hungary. And the taxation is a very important tool in this rush for the foreign investors.
So let's proceed to the next speaker, to Lila.
Thank you very much.
Thank you. The next presentation will be about kind of booming topic among our events as well. It's about Hungarian Golden Visa program, about immigration opportunities.
My name is Lila Bencsik. I will be talking about the glamorous side of immigration in Hungary. But before moving forward, I would like to talk about the legal situation in Hungary in general. So, at the end of 2023, the new law on entry and stay of third country nationals was published, and most of the rules came into effect in the beginning of 2024. This new law applies to third country nationals who do not have the right to free movement, residence, or refugee status. One of the key changes in the new law is that it organizes stays based on their durations. So we can see short-term stay, long-term stay, and long-term residence. The short-term residence is when someone plans to stay in Hungary for up to 90 days within a 180-day period. The long-term stay is when someone plans to stay in Hungary for more than 90 days within a 180-day period. And the long-term residence is the highest status, is the highest level prior to the Hungarian citizenship. It is indefinite and it can only be terminated by withdrawal. So the new law breaks down residence permits into different categories, and I won't cover all types of residence permits today, but I will focus on those which are related to business purposes and investment purposes. So I will talk about the Hungarian Golden Visa, the National Card, and the Guest Self-Sufficient Residence Permit today. Let's start with the Hungarian Golden Visa program. So the Hungarian Golden Visa program is the guest investor residence permit according to the law. Hungary is a full member of the European Union, and the residence permit issued by the Hungarian authorities is valid for the entire Schengen area. It signifies a zone of 29 countries that have officially abolished all passports and all other types of restrictions at their mutual borders. This Hungarian Golden Visa program is official from the 1st of July 2024, although in reality it went through a lot of amendments in the past few months. It offers a 10-year-long residence permit for the guest investors who invest in Hungary, and this residence permit can be renewed for 10 more years. So overall, it can give 20 years for the guest investors. But let's see the investment types. The guest investors can choose between two options. The first one is the real estate fund for at least 250,000 euros. And the other one is making a financial donation to a higher education institution for at least 1 million euros. And we can draw a parallel here. If you're familiar with the story of Charlie and the Chocolate Factory, where a few lucky children got the golden ticket, and with this golden ticket, they could enter the chocolate factory. And this Hungarian Golden Visa program can be the guest investor's golden ticket to enter Hungary and to enter the Schengen area. The main process has 2 steps. The first step is to obtain the guest investor visa, which is valid for 6 months. In order to obtain this visa, the applicant needs to apply at their country's diplomatic mission, and they need to meet other certain conditions, which you can see on this slide. So the applicants need to have valid travel documents. They need to have sufficient resources to cover their subsistence. They need to have a health care or health insurance, or if they don't have it, they need to be able to cover it. And if they are subject to expulsion or a ban on entry or residence, or if they are subject to an alert in the SIS, which is the Schengen Information System, then they cannot participate in this program. And of course, they need to prove that they have national economic interest, which means that they need to invest and they need to choose between the 2 investment options. The second and last step is to obtain the guest investor residence permit. In order to do that, the applicant needs to have the guest investor visa, and they need to apply for the guest investor residence permit, and they need to visit Hungary once. This guest investor residence permit is valid for 10 years, and as I mentioned before, it is renewable for 10 more years. There is an opportunity for family reunification as well, and the family members can be the spouse, or the main applicant's spouse, and their children under 18 years old. And their guest investor residence permits are valid for 10 years, and these residence permits are renewable in the same way as the guest investor residence permit. I mean the main applicant's residence permit. And other family members can join the main applicant. For example, the dependent parents, parent-in-laws, children between the age of 18 to 26 if they are not married and they are dependent. But their residence permit's validity is 3 years and renewable for only 3 more years. Let's see what are the main advantages of the Hungarian Golden Visa program. So the guest investors who obtain this residence permit can live and work in Hungary. They can travel between the Schengen area countries without any restrictions, and they can also stay for up to 90 days in almost any EU country. But this residence permit can have boundless opportunities for business and for personal life as well. Let's move on to our next residence permit type, which is a new type in the new law. So the national card. A lot of people call this residence permit the cheaper little brother of the golden visa, but it's not entirely true, because this new residence permit provides certain third country nationals the opportunity to stay and work in Hungary. And you can see a list of the countries whose nationals can apply for the national card. Let's see the conditions of the national card. So third country nationals can obtain the national card if they have an employment relationship in Hungary and they perform work in Hungary. And when I say work, I mean actual work. And they need to be, for example, an owner or an executive officer of a business in Hungary, and they need to stay in Hungary. The validity of the national card is 2 years, but it can be extended for 3 years as many times as needed. So there is no limit on it. Let's move on to our last residence permit, which is the guest self-sufficient residence permit or guest self-employed residence permit. It is also an opportunity for the third country nationals to do business in Hungary and get a residence permit as a bonus. The conditions are as follows. So the applicants need to perform their activity independently for remuneration in accordance with the law, of course, or they need to perform their activities as a managing director of a company. This residence permit's validity is just 1 year, and it can be renewed for 2 more years for the same purpose only. But in order to renew it, the applicant needs to meet the conditions of social coexistence, which means that they need to pass a Hungarian cultural knowledge exam, which is in Hungarian, and there are questions, for example, about Hungarian national symbols, national anthem, the history of Hungary, for example, Treaty of Trianon, but we can find questions about Hungarian poets and poems as well. But we can find a list of exceptions. So you can see a list of countries whose nationals do not have to pass a cultural knowledge exam. And you can find 17 countries in this list. So if they obtain the guest self-sufficient residence permit, the nationals from these countries, and they want to renew it for 2 more years after the first year, then they don't need to pass this exam. So let's talk about which permit is right for whom. Of course, it depends on the applicant's main goals, but let's start with the golden visa. The main advantage of the golden visa is there are no requirements on staying in Hungary. With this residence permit, the guest investor can live and work in Hungary, and it has a validity of 10 years. And it can give 10 more years for the guest investor, and it is good for business opportunities as well. For the national card, it is an opportunity for certain nationals, and it is valid for 2 years, but can be renewable as many times as it is needed for 3 more years and another 3 more years. But the stay in Hungary is mandatory in this case. And the guest self-sufficient residence permit is valid only for 1 year, can be renewable, but only for 2 years if the applicant passes a Hungarian cultural knowledge exam, if the applicant is not an exception. And regarding the national card and the guest self-sufficient residence permit, these residence permits are great opportunities if someone would like to do business in Hungary, set up a company, or they want to do business in Hungary and they want to obtain a residence permit as a bonus. Because in the case of national card and guest self-sufficient residence permit, the stay in Hungary is mandatory. But with the golden visa, there are no requirements on staying in Hungary. And regarding the family reunification, the golden visa offers it. The national card also offers it. And the guest self-sufficient residence permit offers it as well, but only after 1 year. I have already received some questions regarding the golden visa in the past, and I would like to talk about the most popular questions, because a lot of people ask that how long does the procedure take? And it can take, so the procedure overall from the beginning, it can take from 3 months to 6 months, but it depends on the Hungarian authorities as well. The next question is about the first step, which is obtaining the guest investor visa. So in order to obtain it, the applicant needs to apply for this visa in their country's diplomatic mission. But if the applicant has a valid Schengen visa, then the applicant can skip this step and they can go straight to Hungary and apply for the guest investor residence permit. The next main topic in line is the investment fund. So if a guest investor chooses this option to invest in Hungary, then they need to keep this investment for 5 years, for at least 5 years. And after 5 years, they can decide that they want to sell it. They can do it. But it's an important note that if in the future they want to renew their residence permit, then they need to invest again. But if they keep their investment for the whole 10 years, then they don't have to invest again. But if they sell it, then yes. The next question or topic is the travel to Hungary. So when the applicant is granted with the guest investor visa, then it is valid for 6 months. And during these 6 months, the guest investor, the main applicant, needs to visit Hungary once because of identity verification reasons. But it's just a short visit, and the applicants need to visit Hungary once. And as I mentioned earlier, if someone, the applicant has a valid Schengen visa, then they can skip the guest investor visa step. And the last topic is the family reunification. So the family members, as I mentioned, can join the main applicant, but the application can be done from the family members after the main applicant has already obtained the residence permit. So for the family members, there is no first step. The guest investor visa. They don't have to apply for the visa. They only have to apply for the guest investor residence permit after the main applicant has already obtained it. And thank you so much for your attention. And if you have any questions, then feel free to reach out.
The first one, when the guest investors visit Hungary, what do they need to do? Why do they need to visit Hungary?
The applicants need to visit Hungary after they applied for the guest investor visa, and their visit shall not be later than 93 days of the submission for the guest investor visa. And as I mentioned, this visit has identity verification reasons. So they take photos of the applicants and they identify him or her.
Can Russians apply for Hungarian Golden Visa program?
Due to EU sanctions, Russians cannot buy financial instruments. But if they have a valid EU residence permit, then it's up to the bank's discretionary decision if they want to open an account for them. Yes, that's my question. That's my answer.
We received a few questions from Mrs. Ter. First one, can the Golden Visa residence permit holder work in Hungary?
Yes, they can work in Hungary with this residence permit.
For the family reunification regarding the Golden Visa, can be a partner join without marriage part if it is a common law partner?
I see. Okay. So according to the Hungarian rules, when it says spouse, they mean that they need to be legally married. So the Hungarian law, unfortunately, cannot accept a common law partner. They need a marriage certificate to prove that they are legally married.
The next one from Tatiana. Are there any special option to invest in real estate and obtain a residency?
Before the 1st of January 2025, there were 3 options to invest in Hungary. And the second option was the real estate option, but it was cancelled with the 1st of January. So the guest investors cannot invest directly in real estates. Regarding these 3 residence permits and especially the Hungarian Golden Visa, it's just the investment fund and the financial donation.
Can applicants renew their national card without any limit?
Yes, they can renew it, and there is no limit. So it can be renewed for 3 more years. The main validity of the national card is 2 years, as I mentioned, and it can be renewed for 3 more years, and it can be renewed as many times as it is needed.
How can applicant prove the child 18 to 26 years old is dependent and can be added to partner's application?
So if I heard it right, this question is about the main applicant's children aged between 18 and 26.
26.
Yes, and how can they prove that they are dependent?
Yes,
so there are some conditions, but they can prove it submitting documents that about the applicant's children, that they are not married, for example. But feel free to send us an email, and we can send a detailed answer for this, because it's so detailed that okay, how can I prove that someone is not dependent? Because yes, the first one is that if they are not married, and for example, if they have the same address as their parents. So it depends on the case.
One more question which we received from Alexandros. Option 1, invest 250,000 in investment fund. Is it money recoverable at the end of 5 years? And is it guaranteed?
There is no guarantee for that. Because it's an investment, and it depends on a lot of things. So there is no guarantee on that.
And actually, we have one more question, but maybe this question more related to Csaba. Is cryptocurrency means of payment in Hungary? What is the status of cryptocurrency in business?
So, if I could understand the question correctly, how we treat the crypto assets in Hungary from taxation point of view.
Yes.
So, in Hungary, we treat the crypto assets as receivables. So it means that I have a receivables against a crypto asset. So in general, if I sell my crypto asset and I can get gain after this sale, then this is the profit from the sale of the receivables. But from personal income tax point of view, we have a different category for this, and we have a different class, a different category, which is called income from crypto asset. But from a corporate taxation point of view, it is still handled as gain from the sale of the receivables.
One more question from the same person, Katerina. Is it possible to legally conduct crypto activities in Hungary, open an exchange office, open a crypto exchange, establishing a crypto wallet company?
You might know that in the European Union, there is a common regulation for crypto business, which means that the same rules are applicable in all of the European countries. So if you would like to get involved into crypto business in the European Union, you need to get a license from the central bank of the competent country. So it means that this is a regulated market in the European Union. So you cannot do activity without a license.
Thank you so much. I guess we end with the main questions. There was one question before, which is related to main benefits compared to, for example, other European jurisdictions like Cyprus, Malta, and Luxembourg.
No, actually, I wouldn't say that Hungary is the remedy for all corporate tax injuries, but Hungary is on the map of the tax planning. But if we compare Hungary to Cyprus, for example, both countries have participation exemption rules, so the dividends and the capital gain can be tax exempt in Cyprus and in Hungary, so in both countries. But if we are talking about trading business, corporate tax rate of Hungary is just 9%, which is 12.5 in Cyprus and much higher in Luxembourg, for example, because the applicable tax burden on the profit is more than 30% in Luxembourg. However, Luxembourg has its own tax regime as well. But if we are talking about tax planning, we shouldn't forget about the maintenance cost of the companies. So I can confirm that Hungary is more economic in comparison to Western European countries. So the maintenance cost in general could be lower in Hungary than in the Netherlands, Luxembourg, or Ireland, or the UK, or Liechtenstein, or Switzerland.
Actually, like we are finished with the questions. If you would like to add anything, we could have a small discussion, or if any of participants have questions, they could forward it to us and we will send to you, or you could directly contact Crystal Worldwide. They will provide you with all details. Csaba, maybe you would like to add something like.
So actually, we would be happy to answer all of the questions. Sometimes to give a proper answer, we need to ask back first to clarify the details, and this is how we can give a proper answer. But we would be happy to do this. And thank you for your time and thank you for your attention. So I think all of my colleagues was very happy to be with you during this webinar. And we hope that next time we can continue personally as well.